Alright, guys, finally the war is getting over. My name is Happy Forest from Lagos, Nigeria. I'm simply sharing my thoughts about the fundamental analysis that is happening in the market right now at the moment. Now, if you look at my screen very closely, you will notice that we're having a kind of positive news from the media, especially from the White House. Iran has just announced that the Strait of Hormuz is finally open and ready for full passage. Thank you. That's from President Donald J. Trump. And the market is reacting to this. Fundamental news and geopolitical news are major channels that we need to understand as far as trading the financial market is concerned. You can't say you want to trade the financial market and you don't put into consideration your fundamental news. Very, very important. We have the technical news, technical analysis, we have the fundamental analysis, and we also have the sentimental analysis, which is the institutional bias. All those institutions, they have information at hand, before they can buy, or sell in the market. So, looking at this, you find out that there's a kind of positive news, but we are having a challenge. Now, what's the challenge now is that the Iran government has actually they neglected their uranium that they are producing, which was part of the 15 points list that was listed, or agreement between the American government and the Iranian government, such that they want the Iranian government to, one of the issues that happened, that one of the reasons that they are fighting is because they don't want the Iranian government to produce uranium. Production of uranium is going to allow them to create all those war drones, bombs, and the rest. So they don't want them to have that because they know that they could have the firepower. You understand? Don't forget that the best production of ammunition comes from America, USA. That's one of the things that they use, to generate income. They sell they sell all these ammunitions. So, and they don't want any country to have, and at the same time, the world power still lies in the Americans' hand, and they don't want anybody to compete that with them. So that's why they want the Iranian government to shut down their uranium production, so which is part of their agreement. So Iran says enriched uranium circuit denies agreeing to sending it abroad. They are disagreeing that they want to send the uranium back to America, because America was saying that they should send back the uranium, so that to be sure that they are not producing the uranium, for all this ammunition production. All right. So, and at the same time, from the Iranian lawmakers, this is the time that they can actually use to get whatever they want from the American government. So, because if they don't get it right now, it's going to be very, very hard for them to get some of their reserves too are in America. You understand? So looking at what we have here. So 40 Iranian lawmakers warn if that it would be a mistake to continue negotiations with the United States without first securing the release of frozen Iranian assets. So they want to get this Iranian assets that is in America. That is part of their own point plan that they drafted, in agreeing to opening the Strait of Hormuz, as the case may be. Markets are reacting technically. Now, what do we see? We see that immediately that news dropped, oil has dropped drastically. The crude oil has dropped drastically. When the war started, we had a kind of bullish run that made oil to go more than 48% above. But as soon as there's a ceasefire, then now we are seeing that all the losses that we accrued during this war, we are finally erasing those losses, and we are back down 38%, remaining 10% since when the war started. which it will still eventually, we are going to gain it, as soon as the market is, active back. And that has an effect. Don't forget that I was saying that this oil has its direct effect on gold. Gold has not, when all the markets are rallying up, gold refused to rally up because the geopolitical tensions happening in the Middle East is a major challenge for gold to trend up higher. Even though other stock markets like the Dow Jones, like the Nasdaq and the S&P 500 are moving in an upward direction, gold refused to bow down to that because gold knows that there is still a geopolitical tension that has not been resolved. You understand? But the question now is, we usually know that they tell us that buy the dip and sell the what, the rumor, whatever. Now, are we going to jump into buying now? No, because if you are buying at this point in time, you are buying too expensive. Normally, we are meant to buy when the market is cheap. And pulling out my my indicator, you will find out that the market has actually overbought. The market has overbought, as the case may be. And whenever the market is overbought, it has overstretched. So buying at this point, you are buying too expensive. What we usually know is that we buy the dip when the market is retracing, when there's a retracement, and we buy when there is a massive pullback into the 50% region, something like this. We buy when the market pull back into a particular place like this, which you call the 50% or 61.8, depending on your own strategy, as the case may be, or depending on the analysis you are doing. Now, how do I know this? If I pull out my Fibonacci, you notice that from that high to this low, I'll be buying. Can you see exactly where the arrow is? I will buy when the market has pull back, because if I'm buying here, I'm buying to expensive. If this market pull back, then this indicator here is going to pull back to show us a kind of red signs like this red boxes. And once it pull back to this 50% of the move, sometimes depending on your strategy, it can even go further. You understand? But as the case may be, you will say that this is a support. You understand? This is also a support. So the market can just test this support. It might not go further than this support, because if it goes further than this support, then probably you are looking at another massive sell. You understand? To the downside. But if you are not getting any reaction from 50%, then probably a bullish engulfing, a morning star, a AMA or inverse of AMA, or what do you call it now? Three white soldiers as a confirmation for a upside move back. Do not enter this trade. But one thing is certain: this market is going to retrace back to this 50%. You can't buy at this point. If you look at this indicator, you notice that you are buying too expensive, and we have been told that we should always buy when the market is cheap. If you are buying below this line or from this line, you are buying at a cheaper rate, and that means that you are buying at discount. You understand? You don't buy at premium, then you'll be making a lot of mistakes. So the market are reacting to that. The same thing applicable to Nasdaq. You buy when the market pull back to a 50% region, something like this. You buy when the market pull back into something like this, then you buy up something like this. I'm coming. You buy this way. Can you see? So that is what we have been taught. So you look at the Dow Jones too, is reacting. Can you see? Yesterday, the video I made, the Dow Jones has not actually gotten to this level. It has not created a new high. Don't forget that Nasdaq and S&P 500 has created new highs. but Nasdaq and Dow Jones has not done that, but is about to do that. The market are rallying up, all right. But gold, as soon as there was a ceasefire, gold reacted and gave us this like 100 pips to the upside. Gold gave us 100 pips to what? To the upside. It reacted to that because that is exactly what the news is needed. I don't know if you get that. So that is what gold needed, and it has actually gotten what it needed. So that's why you see that there is a reaction, as the case may be. Now you can see that there was a upside move of more than can you see, before the market started crashing down, when the Iranian government denied the claims that they are abandoning their uranium, but they are taking it to America. So the market reacted to that immediately. Can you see that? Normally, as soon as this market has created these higher highs, we are meant to when we use our Fibonacci retracement from this point, you notice that the market is meant to retrace back to what? 50%. I'm sorry, 50% this point, and the market is supposed to start selling back. You can see that there's even a reaction on this 50% region. So it's supposed to start buying back to this point like this. But it has even crossed, it has even got into okay. It's supposed to start buying up like this. I don't know if you get that. So we are still watching. Today is Saturday, and I think the market is closed already. So let's see what happens on Monday. You understand, as the case may be. So that is what I feel about the market. I think that is all. Okay, I already spoke about oil. Oil is coming down. Oil is coming down, and you notice that there's a sharp rejection. Gold is coming down, oil is going up back. Can you see it? Because of that news that the Iranian government said that they are not going to give up their uranium. So the market are reacting to all those news. You can see how do I know that the oil is going up. If you go to your 15 minutes time frame, you are going to see it. That shows us what the market is doing very, very fast. Can you see? You can see that oil is going up back. You understand? So unless there is this final what do you call it, decision, then the market are going to go back into normal, as the case may be. Meanwhile, I think the 10-year yield for the United States, let's see, 10-year yield, let me go to daily time frame. Okay, it's trying to come down. The 10-year yield is trying to come down, while the bond is coming down, then the yield is what? Still up. You understand? If you look at this move, is that they have inverse relationship. Can you look at this move? Came down and is going up for retracement. Let's go back to the 10-year yield. Let's go back to the 10-year yield. You can see it's going up and now it's retracing back down. Don't forget that I said they have inverse relationship. Can you see? This one is going up and it's coming back down. So they react to any information, both the bonds and the yield, as the case may be, and the same thing that what you call gold does now. You understand? So I think that is what I feel about the market, and I'm going to see you guys. Is there any other thing I've not discussed as the case may be? I've talked about stocks. I've talked about what do you call it, indices, stock indices. I've talked about the commodities, and one of the major issues that we're having in the world that is holding the world into ransom. Okay, I think I've mentioned. Okay, I think that's going to be all for now. I'm going to see you guys in another episode. I remain my humble self. Today is 18th of April 2026. So the market is closed, and let's see what happens next week. Alright, see you guys later. Bye bye.